Tuning in now or after the midday market report. I greatly appreciate each and every one of you giving this the opportunity and giving the midday market report the opportunity to be part of your daily update around 2 p.m. Eastern Standard Time. So let me timestamp this. Please make sure to hit that like button so we can help push this through the algorithm and advance our analytics so that we can have more people reach this beautiful community and we can have a more active discussion even during the midday market report. Good afternoon, Harvey. Welcome in. Devin, welcome in. Glad to see a few of you in here for the midday market report. I greatly appreciate seeing that already. Good mid-afternoon, 2:06 p.m. Eastern Standard Time on this Thursday, December 7th, 2023. I'm XRP Future Millionaire, and I reside in the great state of Michigan. Sorry, Michael, I was about to answer your question while I was still doing the intro. Michael, not question, but your statement. Thank you, Michael. I appreciate you saying that I'm the man. Trading with J-Ride, welcome in. Always great to see you in here, my friend, with the 589 badge. Been a part of Tom's Army for 2 years. Devin's been a part of Tom's Army for over, about 6 months, 7 months now. Excellent. Mark Caston, welcome in. John Hall, good afternoon. Appreciate seeing everybody in here to watch the midday market report. So the Dow Jones, let's get right into it because we're going to talk a little bit about gold here as it's on edge a little bit as we await the jobs reports and yada, yada, yada. But we'll go over that at the very end of this. So the Dow Jones is up 86.63 or 0.24% up to 36,140. We still have yet to overtake this layer at 36,134. That's where we need to break outside of this broadening wedge. And then we can have a massive possible breakup. We've got two targets depending on how you want to measure it. First would be 39,816, maximum target of 41,915. So either way, you'd be looking at over a 3,700 point move roughly, assuming you could get over the pivot point at 36,986. Then it opens up the door for another 3,000 point move if you can get on top of there with the first technical move. The overall move could bring you close to 42,000. Anthony, good morning to you, my friend. Taki, good afternoon. Michael says, by the way, thank you for that long-term look at the market you did the other day. You're welcome, Michael, but I'm going to do a more in-depth long-term look, not just at the market, or not, I should say not just of XRP, but overall. But I do want to do an update on XRP, not so much for the trading aspect, for more of if you're a long-term accumulator and you're looking at this as down the road. You don't even care about 25, 26, 20. I'm talking about like 28. I would like to show an expanded look of the explosive potential we could get when we get down the road a little bit. You know, right now it's always shaky because we haven't fully flipped and we're in between two systems right now, the old SWIFT and the new ISO. So it's going to be interesting. Physical money's not, or physical currency's not just going to try to dissipate for the digital, but we'll see what happens here. But for the Dow, the very critical level, this is either going to play out to be a reversal candle and we're going to end up correcting down a little bit, which it possibly could, or we're going to end up holding this structure. Right now, though, if we do break down a little bit more, it's going to try to hold the 20-day here. So it'd be about an 800 point correction here right off the top, or 450 right off the top. DXY down 0.61%. So just watch that broadening wedge and see if we can get over the top. If not, then we know what we have to do. Oh, 11 months. That's right. That is, that's the last badge until the 1 year badge. Excellent. So in just under 25 days here, Devin, you're going to get the 1 year badge, and that's the I told you so badge. Yours is the 6 month badge, but it wouldn't let me do anything until 1 year, and then 2 years after that. And then 3 years, but we're getting close, so I might be able to do the 3 year badge soon. Isn't that crazy? We got somebody at 30 months, I believe, right now, or 31 months. Anthony, good morning. Devin, 11 months. Jose, good afternoon. Watch, recycle, repeat. That's right. Watch the content, recycle it to friends and family, and come back and watch the next update. Repeat. The DXY, everybody can look and see how the DXY, exactly what you think your interpretation is. But I'm waiting for, let me get this into, we'll put this in the daily real quick. So right now the DXY, it tried to come up to the overall pattern resistance. This was a rising channel that we had on here from back in here, but it broke down, and I didn't want to keep the pattern looking confusing. But we had the rising channel in here. Once it reversed, we knew it had to come down. We've had another little bit of a, actually we had the rising channel right here. This is where the rising channel was. We had it filled out right here. It broke down now, and now what we were talking about yesterday, the day before, we came up to test the death cross, and look what we did. We put a long leg doji signifying the likely end of this pattern run up. So if that's the case, the US dollar could be coming down to a 1-to-1 parity quicker than most think. And that's why you have to become your own central bank with gold and silver. It's just that simple. Steve Mack, 2 years, 5 months, 25 days, and happy about it. You're one of the ones who is making me almost able to do that 3-year badge now, because you're up to almost 30 months. Stanley's at 30 months and 1 day, and Tom has been the same ever since. I appreciate that. You're probably the one that I was seeing, Stan. I think that was Stanley. I think that's the one that I was seeing going towards 31 months here now. So, Stanley, I appreciate that vote of confidence, too, saying that I've never changed. That's what I like to hear, because I take pride in just being the same each and every day. Whether one person's watching or a million people are watching. Cryptic Crypto, welcome in. Good evening, Tom. Thanks for your efforts. You're welcome, Mo. And Mo is in month 1 of Tom's Army. Nothing more important than joining that month 1. That's me being abducted by aliens in that emoji badge. That's how I know he's in month 1. My face is superimposed there. You better believe it. The F is for Sean. Oh, that's right. Sean, I should know this by now. Thank you, Sean, so much for being in Tom's Army for over 2 years as well. Almost 30 months. But yeah, so that's that with the DXY. We're looking to see if this reversal candle plays out. We came up perfectly for the rejection at the 200 on the death cross. And if it's standard operating procedure, we will certainly come down. The only channel I've been following this long, everyone else has sold out in paddles. Yeah, I know, unfortunately. I know. The problem with most channels when they get to my size are well before you get to even closer to 20,000. Once you get about 10,000 is when you'll see the sellout. A lot of people. I get so many paid promotion sponsorships and advertisements I could do. It would make your head blow up. I could be very wealthy off of, you know, remember, when somebody gains wealth, somebody else has to lose it. So for me to gain all that wealth in that way means that I have to take advantage of each and every person in my audience, and they would end up losing money in the long term. That's not what I want to do. I can make myself wealthy just by doing what I'm doing, because I have. Not like millionaire wealthy, but, you know, went from a penny heir to a several $100,000 You know, it's something. It may be invested into other things, but it's something. So anyhow, with the U.S. government bonds, we're looking to go sub 4%. That's what I'm looking for. The DXY is reversed. I'm not so certain this 200 days is going to hold in the daily. The one thing that could happen is if it bounces here, you could always come back up and get a retest at 4.35%. But do we really see any strength here? I'm not seeing a lot of strength here. The moment we break this 4.10%, I think it's just going to come right down to 3.94%. There is not much here. Sure, you can get a breakdown and then a retest of the 200 after, or a premature retest at 4.3% real quick. But I don't know. With the way it's looking with the US dollar, it doesn't seem like that's in the deck of cards here. Crude oil is coming down to the bottom of this expanding wedge that we've talked about. We had the year-end target at $70. We put it at $69.90 because the U.S. government said that they wanted U.S. oil down around $70 a barrel for the end of the year, and this is priced in U.S. crude WTI. So it's beautifully running down here. It's perfectly running down. Thank you very much. It's perfectly running down here. And if we're looking at this for an even further breakdown, maybe $65 if it comes all the way down. So that's what I'm looking at. They've given us no reason to think otherwise, but I still think in 24 now, even more than before, this is going to end up around 130, 140 a barrel. And it's going to be brutal. Because right now the supplies is decreasing and they're expanding the price. That is not good for anybody. Gold-silver ratio is up a little bit more today as gold is moving just a tiny bit more again than silver, as we talked about in the correction mode. Could it become possibly up to this 90 to 1? As we're in a beautiful time to buy silver. I know the prices are a little up, but if you use and prescribed by my philosophy, I like to buy silver whenever it's 80 to 1 or higher, and then I like to trade it back around 40 to 1. The higher you can get above 80, the better. The lower before 40, the better. And historically speaking, if you go back in the gold-silver ratio, this is just back to 21 when it was a 63 to 1. And then if we go just a little bit further back to more traditional settings, If you look at 2011, even in 2011, ladies and gentlemen, you had the gold-silver ratio come down to 34-1. So what's going to happen now once this monetary policy shifts? I'd say that big long bear flag is playing out for a reason on the gold-silver ratio. Looks good right now for silver, but that ratio is going to come crashing down in the years to come, especially in 24, 25, I think. This is your gold. We're trying to bounce off here. It came down beautifully after the run-up. It had to come back and retest this area, which we put in here before it came down. And now it looks like it's going to try to use this as a breakout. We have a reversal candle in the daily, which is very nice. The long leg doji to show up here after a little push down. Show the support. Now we could have a breakout up past 2,150 if it plays out truthfully. And then we've got B2 gold. As you all know, we've been talking about this for a long time. B2 gold is trying to use this area at $3.21. We're going to learn a lot here. We have the inverted left arm, inverted right arm showing out. And now we're trying to hold the neckline. As long as we hold, I mean, it's still got a lot of room to come down here. Depends where you want to interpret it. You could say 309. You could use it all the way down to the bottom at 296. It's up to you. But as long as it holds this formation, that is a beautiful setup for another push up. And it very well could be trying to go bull flaggy here. But we'll see what happens. It all depends on if gold is going to flush here again. If gold flushes here again, we possibly could get $2.40. But we have to watch because we haven't broke down the key support levels. We're still at $3.14. So just pay attention to those levels. And then last but not least, and please make sure to hit that like button. I appreciate everybody who tuned into the midday market report today. If you're looking to trade crypto, just look in the video description below. It's all the exchanges I use. You can futures and spot trade, and it'll be the lowest fees for you. And no KYC in the USA on BitUnix until the end of the year. Silver, $23.79. And if you want to show me personal support, you can always join Tom's Army like some of the fine fellows and ladies that we've seen in here so far. Or you can send a YouTube super chat. As you can see, a death cross approximately about to take place here. Pretty close in the silver. We've had a nice retracement in silver, but it's fallen through a key level. So we're going to see if gold and silver ends up correcting even more, or if this is going to be the last part of a shakeout and we can pull back up. But just remember, if silver is below that $24 an ounce, there's always the chance we correct back down to under 23 to 22.50. The 2 hourly, we've already had our death cross through. I mean, this is reversing pretty nice now. So we're going to see, remember, these are lagging indicators. If we lose this 200 day, that looks like a head and shoulders pattern. In the short term, could correct even farther. And if it does decide to come all the way down, this would be your next bounce point. I'm going to keep this here. Just in case it does come all the way through, you might wiggle all the way through down to about 2150, 2160, and then bounce back there. But this all depends on the DXY here. So it's very volatile. And the reason for the volatility, and I'm going to show you why. Gold price on edge outside of the DXY. Ahead of key U.S. jobs data, trade setups on XAU USD, which is gold in the stock market. Gold prices, XAU moved with limited conviction on Thursday, swinging between small gains and losses, investors avoiding taking large directional bets on the asset for fear of getting caught on the wrong side of the trade ahead of key U.S. jobs data before the weekend. So tomorrow we'll be talking about that. The November non-farm payrolls report due out Friday morning could provide valuable information on the health of the labor market, helping to clarify the Fed's monetary policy outlook. For this reason, it could be a source of volatility for major financial assets. In terms of estimates, U.S. employers are forecast to have added 170,000 workers last month, resulting in an unchanged unemployment rate of 3.9%. For its part, average hourly earnings are seen rising 0.3% month over month, with the related yearly reading easing to 4% from 4.1%. While gold retains a constructive outlook from a fundamental standpoint, many traders want more information about the state of the U.S. economy before re-engaging bullish positions, especially after getting burned badly earlier in the week when a promising breakout turned into a big sell-off. Focusing on a possible scenario of non-farm payroll surprise to the upside by a wide margin, monetary policy easing wages. XLM is so correlated to XRP, they move up and down. Yeah, they absolutely do. I told you there was nothing more benefited by what's going to happen with XRP gaining clarity if and when it does in April than XLM. Easing wages for 24 could be scaled back rapidly, putting upward pressure on treasury yields in the U.S. dollar. This could be detrimental to precious metals. Conversely, if MPF figures disappoint in a material way, many investors could shift back to viewing a recession as their baseline case, reinforcing dovish interest rate prospects for the coming year. against the backdrop, yields in the greenback could head lower, boosting gold prices in the process. And then the gold price technical targets, or technical analysis. Gold broke its previous record, briefly reaching an all-time high earlier in the week, only to swiftly plummet, suggesting that the long-awaited bullish breakout was a fake-out. That is not true. Despite waning upward momentum, we would have to break 2,000 for that to be the case, and not use that as a new support level. Retains a positive technical profile, so the path to test resistance remains the upside. With that in mind, if the precious metal resumes its ascent, the first hurdle to overcome is position 2050, followed by 2070 and 75. Looking higher, attention gravitates towards 2150. On the other hand, if losses escalate in the coming days and weeks, support resets rest near 2010. This technical zone could act as a floor in case of further weakness, but a drop below it may be the start of a bigger bearish move with the next downside target at 1990. So that's what I'm looking at. Please make sure to hit that like button if you appreciate my work. Consider subscribing to the channel if you do watch my content. Join the over 19,300 strong as we're getting closer to 20,000. Other than that, I'll catch you tonight if you want to see the XRP live when we cover XRP and our favorite cryptos. That'll be around 6 p.m. Eastern Standard Time. And I look forward to seeing each and every one of you. Hit that like button on the way out. Consider sharing this on social media. And if you want to pay me further support, you can always send a YouTube Super Chat or join Tom's Army. No problem, True. Have a good day, Colin. High time do you reinvest your original investment into? So, when I sold out in 21, I kept what I needed to buy back into crypto because I wanted to have 3,500 for XRP, and then the equal amount I've added into since and other cryptos, roughly about 2,500, 3,000. But what I do is I invest my profits not into other projects, because if when I'm buying, I buy into the projects I want anyhow. But if I have profits, I invest them into precious metals, and I've been doing that in the stock market and crypto since 2017, and you can't go wrong with that. So I'm not going to reinvest in something else if I'm selling out of something. That means crypto is going to be on a downturn as a whole. So I'm not one to sell XRP just to sell into the next altcoin, because if I'm going to do that, why am I selling in the first place? Have a blessed afternoon, everybody. I'd love to continue this discussion around 6 p.m.